We start off with the big after-hours action. Netflix, IBM, eBay, all on the move as our conference calls get underway. We've got full team coverage on Netflix. Less than an hour to go until its call. Gene Munster's getting ready to fire up the red phone in Minneapolis. Mark Newton is here to break down the after-hours moves on the charts. We start off with the big move. The stock is at the after-hours session low. Shares plunging double digits after adding just 2.7 million subscribers, the lowest amount in 3 years. So are the best days behind this stock? Steve Grasso.
No, I don't think so. And Bespoke, Paul Hickey was on. He said a great thing about seasonality on this. The second quarter is always a little bit tough. It gets a little bit better going into year end. So I think if you're a Netflix bull, this really hits you in the gut. But longer term, I think you can stay long.
That's really looking at the glass half full, isn't it? I mean, 2.7, but 2.7 million versus 5 million.
Didn't they come
it's
out
the first drop in U.S. paid subscribers ever.
And that was their number.
You could argue that, okay, fine, Wall Street got ahead of itself and was expecting 5 million. They came at 2.7 million international. But it's the loss in the U.S. when you're facing competition and you've raised prices that really calls the whole story into question.
I don't think it's international. What I was upset with is that in April, they're the ones that came out and gave us that 5 million number.
Right.
So it should have come from their guidance was completely wrong in April. How do they not have a gut feel on that number to dress the window down even more? And I think it's about international growth. It's not about domestic for me. It's about international.
Well, but the domestic matters because you have competition coming in domestic and they raised prices here, right? So that's what investors are concerned about.
And the U.S. market is slowing on a relative basis in growth. So,
I mean, it's obviously fantastic company, great story. But when you have metrics that are so sky high like this, and you have a miss like this, it's not like, oh, all of a sudden it's cheap, right? It's still in the stratosphere for me. And, you know, you always wonder, and for years I've been wondering, all right, when does it finally catch up to them? When does all the spending and all the growth finally catch up to them that they don't actually make enough money to warrant this kind of valuation? I don't know if this is the time. I certainly wouldn't short it here, but I would let it settle for a while. And I just want to bring up one point that Jim Cramer made that I think is so important. He said, you really shouldn't trade anything before you hear the conference call. Mm-hmm. There's so much color to be had on this. We'll see what they say, but to jump in right here with half the information, I don't know. You got to be.
I would love to see if they have a good explanation for that big of a shortfall at this point.
Well, he's saying, all right, in April they said that. They're, I think, talking about a decent quarter this current quarter. Do we have more credibility? Do they have more credibility now than they had in April? I don't know.
I mean, the content slate was weak in the second quarter, right? And in Q3, you got Stranger Things, season 3. There were 41 million viewers in the first 5 days. You got Orange is the New Black. Money Heist. You got a lot of good stuff happening in the back half of the year, so hopefully they can rebound. But, I mean, there's no way to sugarcoat this. This was a complete disaster, a complete whiff.
Well, how bad is Friends and Office losing that?
Is anyone on this desk, does everyone have Netflix? I have Netflix. I did not subscribe to Netflix. Do you watch a whole lot of Friends and The Office on Netflix? Never.
No. My kids do.
So do they, because they're a different generation, but I'm sure they're watching other things as well. People, when you look at the numbers, it's above 50, close to 60% that are looking for their own content, not Friends and not.
My bigger concern as an investor would be the fact that they did put through these price increases. We saw this big drop in total users. And so the question, with all this competition coming forward in the back half of the year and going into next year, will we see Netflix's ability to raise price going forward curtailed?
To me, that's the most shocking thing, right? I mean, to be fair, earlier this week, I had said I was bullish on Netflix and said, listen, you're not going to cut it. Netflix is one of the last things you cut off in a recession or in a downturn in the economy. It turns out I was wrong. So for me, I've got a question of the whole thing. And their entire business model has been spend a ton of money to get those subscribers. If you don't have that growth, Wall Street's not going to give you a break on spending money.
Or if you can't raise price.
Right.
On a slowing growth user base like the U.S., then what?
Yeah, that's a problem. If you can't raise price, you got big issues, especially with what they're spending on content right now. I mean, the free cash flow burn is still an issue. Fortunately, they reaffirmed that it's just going to be negative $3.5 billion, and it didn't get worse because last quarter it was $3 billion. Then it ticked up to $3.5 billion. So I was a little concerned that it might tick up even higher. They did reaffirm that it's going to stay where it's at. But, yeah, I mean, it is an issue.
But we have seen this before, right? We have seen seen them increase price. We have seen the stock tumble. We have seen the seasonality of the second quarter.
Have we seen this decline in U.S. paid subscribers?
No, we have not seen that. We've never seen that big of a whiff on the numbers, and that is it's definitely worrisome. But I believe to what Karen said. Let's listen to the call.
Sure.
And let's see what the message is.
But right now, the outstanding question, to Karen's point in terms of valuation, is, this is a growth stock. It's certainly priced for growth. So if we're not seeing that in U.S. subscribers at this point, then what?
Yes, valuation, though, has been astronomical, and that's a problem. But I should say that has never been a problem before. So it depends on to what degree it becomes a problem.
That's exactly the problem with these high flyers. It doesn't just happen to Netflix, but as soon as that growth slows, and that's what they're getting credit for. We've seen it with many other companies. As soon as that slows, the story deteriorates, and different buyers have to come in, and it's not cheap, to Karen's point. So what metrics are you going to use? It's a slowing growth company based on this quarter, based on not hearing the call.
So they are talking about a little bit of potential pull forward. So the first quarter, they added 9.6 million subscribers, which was, a blockbuster quarter. 2.7 million this last quarter. So maybe there was a bit of pull forward. Maybe this quarter isn't as bad as the headline number leads you to believe.
I don't know. They're the ones, as Crasso said, they're the ones who came out with the guidance. Right. So, I mean,
they should have said there was pull forward on the first quarter, so the second quarter is going to be down to 3, and at least 3 would have been a miss, but not as big.
Yeah.
So you got to wonder what happened.
Well,
what happened between April
and the
end of the
most
quarter?
interesting call in Netflix history right now today. This could be the most interesting call that they've had. And the flip side of it is Disney. I would have been betting against that one. That one's still up 30% year to date. The chart is still intact.
Betting against that you would think that the stock would have fallen by now.
That would have fallen, come back to earth. Yeah. But this stands to reason. When you look at the whole complex, it stands to the positioning of it. You look at eBay, you look at IBM, you look at Netflix. Those crowded names that people were in are dropping the most. And the names that people were not in.
You don't think Netflix was crowded?
No, that's the point.
Oh, okay.
I think Netflix was crowded, and people that were underweight in IBM had to chase it. People that were underweight in Disney had to chase it because they were waiting for it to break out of that trading range, and it eventually did, and it's holding.